Okay, hello everybody. And today we're just going to go over the last gold trade that I did go over in the Zoom call that I did on YouTube for everybody to understand breakup structures in the market and supply and demands how I trade basically. When I'm giving out my gold free analysis in my gold group. If you want to join that group, it'll be in the link. It'll be in the link on in the description of this video. So you can just literally click on that link and join the free gold chart markup group. In that group, basically, I just go over loads of markups like how you can see here on my chart and exactly how I explained it in the last video as well. It will be linked in this video in the top right of the screen somewhere over here. You're going to be able to see exactly why and how I draw these type of markups and how you're going to be able to take these trades. It is a 1 hour video, but I really do suggest you do watch to the end because you're going to get a lot of valuable content, based on that. And if you don't, kind of is it's kind of up to you, how much you kind of want to learn in this game. So don't miss out, basically. Don't miss out, people. Let's just get straight into this anyway. Do, 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 do. Just to let people know already, gold, is it there? Let's go check. Sure. Gold is pretty much at the supply level right now, the first supply level for the daily for possible sells. Yep, it is there now. It's taken out all of the imbalance here. We'll go over that after, but it's taken all of that out. So gold could literally start to reject from here, or gold will spike back up to this level here, more than likely. Yeah, if it is going to spike up, and then it can come down like this. We are currently daily bearish based on the break of structure over here. Let's make my screen bigger as well for people. Based on the break of structure here. So again, as I've taught you how to use your path tool, you want to go from the top of a bullish candle and the bottom of a bearish candle. So I'm just going from the top here. I'll go up here. It doesn't matter where you start from, just as long as you start from the top or the bottom of the correct candle. I'll go all the way down to here, all the way up to here, all the way down to here, all the way up to here, and then boom. You want to pay attention to your V's and your A's. This is what I call my A's here, and this is what I call my V's. These are basically highs and lows, so swing highs and swing lows. And it's part of what builds up the four abbreviations. That's what I like to call them, which is high lows, lower highs, lower lows, and higher highs. So basically, it's pinpointing all of these for you. Of course, you're trying to catch your re-entry for sells on lower highs, and then your buy continuations would be on higher lows. Now, of course, you have to pay attention to a higher time frame trend in order for you to do that. So even if you're looking at the 15-minute chart, then you would probably want to go down to the 5 minute for entry, but you're looking at a 15-minute for trend and a 5 minute for entry. So you'd be looking for a 5 minute lower high or a higher low again for your entry. So simple like that. What I'm doing is I'm using the daily and the 4 hour time frame exactly how I explained in my last video. So again, you can go over that video. I'll put the link of that video in the description here as well. And you can literally go into that video there and you can, again, like I said, it's very, very fundamental that you do watch this video because you're going to learn a lot from it. But we can see the setup here. So we had our daily breakup structure right over here when price action broke yesterday with this sell. We was already daily bearish. So I had my sell positions in from here for the continuation of the sell. And lucky enough, I was able to catch this sell. Now, what I did do is I was repositioning myself based on fair value gaps. Again, I'll go over that in a little bit. I just want to show the markup of the trade. So this is how I was able to catch my sell entry. My entry is like up here based on fair value gap. So I just kept basically moving my trade. So as it kept going negative, positive, negative, positive, basically as it got higher and higher to the next fair value gap, as long as it was going to hold this supply that you can see in the background over here, which was the 4 hour supply at the time, we wanted it to hold this high. I managed to reposition myself with a entry right around here. And then that one was the one that did eventually kick in when the news in NY session yesterday came through, the high impact news. Can't remember which one it was, but it did come through. So yeah, it pushed my trades down, and as it went into profit, some of them were minor losses like 10, 15 or $20. I just closed those and closed any profits I had obviously in my top position in order to push help me push my profits in. And obviously the trade went down. So what we can see right over here is that price action has obviously again gone daily bearish again. Maria, Maria, what's happening? Maria. What did they do, you know? So as I was saying, as price action broke daily structure here, bearish. Now we can go to the 4 hour time frame, and then here's how I was able to find my 4 hour entry. Again, boom. So here, so this is obviously the daily break of structure here. My first 4 hour supply was based on here from this first break of structure here. If I just get rid of this one now, because you saw me do that example. Now, let's just start from anywhere here. So I can just start from where this was down. So I'll start from here. I'll start from down here. So we just go here, boom, down here, up here, down here, up here, yep, down here. Shouldn't have clicked there, but no. Boom, up here, down here, boom. And there was a V here, as you can see, and price action broke this low here with a 4 hour bearish candle. So, of course, what did that do for me? That created a supply level from this bullish candle here, which was the last bullish candle. And then price action had a supply like this going across. And this is literally my play area. As you can see here, this is the middle point of the supply, which is the 50%. And you can literally see price action just literally came back to that 50% region there. And that's where we started to see ourselves. So I even had a confluence of this. And like I said, I was going down to lower time frames as well to see FVGs. And that did help me out slightly just to see it. You don't need to have the FVGs to trade. You can literally just trade it like this. But obviously, once you get better and better at trading, if you want to get a more sniper entry, definitely I can suggest learning about FVGs because they can get you very good reversal points. And obviously, if you do manage to get a lower time frame entry one, maybe a 5 or a 15-minute one, you can get obviously a sniper entry in a trade setup like this. But you can see how it respected this supply level here. And let's just mark this out now to show that it was a winning trade. So even if you entered at the bottom of this box and you got in here to here, this was at least a 1 point. I need to move this over so I can see it. Yeah, this was a 1.7R trade setup that I did manage to give out this week for a sell trade on gold. We did actually catch some of this sell that was coming in from, I believe it was this sell here actually. Did we catch? It was this one or this one? Can't remember. But the charts are posted in the Telegram group. You can just literally click on the pin section. You can see all the charts I gave out of any trades at any given time. So you never have to worry about that. Just press the pin section at the top. And yeah, but we definitely was able to catch some sell pips at the beginning of the week. It was either Monday or Tuesday. And then obviously we caught this big trade here. So like I've said, gold looks like it could reverse off this level now. It has cleared the imbalance. So I have told everybody about that. And if you was looking to get your trade entry here, now you do have something you could do here. Personally, I don't trade with a stop loss. I tell people that all the time. It's just how I'm able to trade. Whether or not you're comfortable with it, it's completely up to the trader. Everybody can trade different. I don't trade with a stop loss because sometimes price action can just do a wick move like this and then it can decide to sell. So if you put your stop loss here, you're just going to get taken out, then it sells. I would like to go to my chart if I see it's breaking like the supply or demand, and then I'd like to reevaluate the trade to see, okay, where is another extreme level it can go to. So just on a quick glance here already, I can see that there's a fair value gap here on the 4 hour chart in between these two candles. So right here between this gap here, so there was this candle, the space in between this candle here, and then this candle went up to here. There's a fair value gap there. So let's say I was, in an extreme scenario, I could say to myself, okay, if price action goes up to here, it might pull back and at least be able to get me out of this trade setup. In instances like this, I'll still call this trade a loss in the group. I wouldn't now start saying, oh, it's a winner. Nope, I'll still call it a loss. But obviously, just because it's a loss doesn't mean I should have to close the trade if I'm able to manage my trade setup. And that's what I'll do there. I'll look at something like this. And if it reacted off of that, again, as it came down, I would be able to close my trade position. So if people are just curious, like, how is John winning this trade or what's going on there? That's something as small as that I can do. If not, I can look for support or resistance. I can use anything that's in my arsenal of trading knowledge to be able to see where it might pull to for me to be able to get out of my trade at break even or a smaller loss, basically in this trade setup. So again, right now on gold, we've got this setup here that could be from here to here. So you've got, let's say you entered here. Now, this is a big stop loss for some people. I can understand that because we have a daily range that's this big. So some people might not be interested in that. Personally, again, I'll just lower my risk when entering a trade like this, and I'd look to see here. So something like this would be ideal for me, which is no, this is the previous week's low here. So this is clearing this imbalance here. There's a massive imbalance that gold can actually clear over here, which is a FVG, by the way, people, right there. Let's just do it like that. Boom. So you can see gold has not cleared. Let's make it the whole size of this candle because that's what it was on the 4 hour at first. And you can see gold hasn't officially cleared all of this yet. So my take profit would either be like the bottom of this zone, just in case it wants to pull back after that, or it would be right here. Personally, they love to go for previous weekly highs and lows. So I don't mind putting my take profit levels there if they want to do that. So it's something like that. So this is what I'm looking at on this gold setup at the moment. The bottom of this FEG is 1986 right now. 1986. Boom, boom, boom. Okay, so yeah, like I said, this is a big stop loss here for you to take the trade. But if you wanted to take it any smaller, if you wanted your stop loss, then maybe you can put your stop loss here. If it starts to sell off, then you could have your stop loss here, or you could originally have your stop loss here if you wanted to, which is just this isn't supposed to be the 4 hour high. This is supposed to be the 4 hour low. Bad people. Or it could be right here, which is just above this 4 hour low supply. But the problem is if you do enter here like this and it spikes up, of course you can get stopped out. Again, personally, I always count my trades from the whole zone. I won't count it just from here unless there's just one zone there, maybe on the 4 hour. So when I'm counting the wins to losses, I count the whole area. And to see, I want it to do at least a 1-to-1 on the trade setup. Yeah, like this. So this is how my trade idea would be looking. If I was entering down here, I'd have this whole area marked up. And again, just have to lower my risk. Sometimes you've got to take what the market gives you and how it gives it to you. And how it obviously is giving it to us this time is with a big stop loss on this trade setup right here. With this continuation of gold, that could potentially go here. It could even go further as well, but let's just say it goes here like this. This is a 2R trade. Again, this is not going to happen in one day. Most times this is a lot of pips. This might happen in, to be fair, it's not that bad. It's 466 pips. But it could happen over a period of 2 days, one day, or it could be a period of a week even. It just depends on how fast gold wants to move. Yeah, but that's what I'd be looking at on the gold side. So again, gold looks like it's ready to start selling soon. There is NY news today, durable goods, I believe. So you might not see anything until that news release, is what I'm trying to say for now. So you have to just wait your time out. If not, it could spike up to here again, and then you could get your entry. So it's completely up to you how you decide to take it. If you're going to come in from here, or if you're going to come in from here. But you got to remember, you might miss it if you don't enter from here. That's just the game. Like I said, you just got to take it how it is. Last week, I ended up missing a 500 pip simple trade setup on GBP JPY and about 300 pip trade setup on Euro JPY because I wanted it to go to my area where I wanted to buy from, but it never pulled back there. It actually just went off. So happy to miss it. I don't actually scalp, mate. I know people love to scalp, but I don't actually scalp. It doesn't mean I don't know how to, but scalping is a whole different ball game. Do you understand what I'm saying? It's a whole different ball game. And scalping is one of those things I always tell people, if you're not consistently profitable, as in you've been profitable for a year now, trading, slow pace trading, I don't know why you want to scalp unless you want to spend X amount of time trying to scalp. I really don't. I'm not saying it with no malice to anyone that scalps. You can scalp if you want to, but the reality is the majority of people they fail when they scalp trade because you've got to put higher lot sizes, and if you're putting higher lot sizes, because obviously your trades ain't big, they're 20 30 pips, sometimes even 15 pips. You're not going to trade a 0.01 to make 15 pips, you know what I mean? So you're not going to make a lot of money obviously if you scalp unless you're using higher lot sizes. And if you're using higher lot sizes but you still don't understand how the market moves good enough, then you're going to lose. Really, that's what happens. You're going to end up blowing your whole account. So that's why I tend to not try and do scalping or teach beginners scalping as well. It's like because it's very high paced, Ryan. So that's what I would say. The biggest thing I would say, explain to you is this, and I feel like a lot of people are just failing with this one thing, and I say it all the time. The market is literally going to do this. It's not going to do nothing else. It's going to just do this, or it's going to do this. This is it. All you got to figure out is a trend for yourself. So always use a higher time frame for your trend and then use a lower time frame for your entry. The market's either going to create a higher low for you to buy off of like this, or it's going to create a lower high for you to sell off. Just follow those fundamental rules and you'll be shocked how simple it is. Whether you decide to use order blocks to pick that scalping buy or sell, or whether you decide to use support resistance, you can use that if you want to. Whether you decide to use FVGs, if you're, an FVG fanatic, you could use an FVG that comes like that. And maybe now it had price pulls into the FVG and then you take your trade setup from there. Literally, it's completely up to you what you decide to do when scalping. But all you have to pay attention to, and I'm telling you, you really don't have to overcomplicate this, is just pay attention to the higher low that forms and then the lower high. Once you start to see that, literally, even though you probably know it's the most basic baby pips information out there, and people really just jump, they dismiss it so badly, it's unreal. Literally, just use any of those tools you use, Fibonacci, candlestick patterns, whatever you use. Just make sure you pick one time frame for trend, yeah, and then pick a time frame for entry. And then when price action meets up for the pullback back into that entry zone, that is where you're looking for your trade setup. How do you know the pullback has happened? Well, you're going to see a break of structure on the time frame for your entry there. And a break of structure is exactly what I explained to you using the path tool to draw your zigzag. Literally. If you understand how to use break of structures exactly how I've taught you in the previous video, you're going to know that when price action comes back to your FVG, your order block, your supply demand, your support resistance, your Fibonacci level below the equilibrium, above the premium or in the premium, whichever way you want to use it. The previous day's low, the previous day's high, the previous week's low, the previous week's high, monthly resistance, weekly, whatever you want to use. As long as price action breaks out and pulls back into that area, when it does a break of structure there, that's giving you a sign that, hey, this is how you take your trade. Doesn't matter how you scalp. People are going to make it look so fancy, this scalping thing. Wait for the kill zone. The market opens at this specific time, and this is when you should get in and make sure it sweeps this level. And after it's done 25% of the candle's full body, and I'm telling you, people, you're kidding yourself. It's either going to buy or it's going to sell. Just wait for it to get to a zone, find a higher low, lower high where you believe it's happened because of the breaker structure, enter the trade. Don't overcomplicate it. Does that help you, Ryan? Right there. Does it help you, mate? Let me know. No problem at all. Just keep it simple. Honestly, keep it simple. Keep it simple. The problem that people have when it comes to scalping is they're still not waiting for price to get to where it can form a higher low or a lower high. If you're looking at a trade and you just feel, someone said in the gold group, I want to get in for a sell now. What do you think? Where should I put my stop loss? Well, if you understand how to pinpoint where your higher low or lower high is based on your entry, then you'll know your stop loss should be below that higher low or above the lower high. It's simple. You wouldn't even have to ask that question. But you asking that question already, whoever did ask that in the free group today, lets me know that you're not paying attention to higher lows and lower highs. You've dismissed them. Do you understand? And that literally is answering that person's question. Let me go over this. Hey, John, sorry, I was away for a few minutes here. Explain. A few minutes. Did you explain the top of the supply was at? No, the top of the supply is here. So, like I've said, it's always harder for me because I always tell people I don't use a stop loss in these trade setups. All of my trades, I've got loads of trades open. Anyone that's got management accounts with me, they can see. People even message me. They're like, John, I don't know if you forgot, but you haven't put a stop loss on your trade. And some people are like, I don't trade with stop losses. I know because it just becomes annoying when you trade with stop losses. So I don't try to do this whole position thing, and I don't end up blowing accounts just randomly, especially if I'm trading normal. You just won't. Do you understand? Because again, you're not trying to trade crazy lot sizes. But me, I cover the trade setup like this. So obviously I understand not everyone's going to do or want to do what I'm doing. Completely cool. And of course, my data is not built up on trade setups. None of my signals or anything is not built up on price never hits an imaginary stop loss or whatever. No, I always give a stop loss and entry just to make people feel comfortable. And obviously, so people have data, because if not, your data can't be read properly because you don't know where the trade would have pulled back to. So here's the stop loss here on gold, right up here. It's at the top, just above this box, right there. And then obviously I'm looking at it going all the way down to, it could go anywhere really, wherever it wants to go down to. It could go all the way down to here, but this could take time for it to get there. But right here is only the target low here, and this one's just about a 1-to-1 if it gets there. The way they gave us the gold setup is the way they gave it to us. But in all fairness, everybody should be in this gold setup from up here. They shouldn't be in it from down here. Anybody that is in a free group, because this is where I gave the analysis from, and we had to hold this trade for 3 days. So we had more than 48 hours. We had like, what, 72 hours to get in this trade for this possible sell. Right there. All right, then. So I'm going to go through my question here. Does that answer your question, Pikachu? No problem at all. If you want to make your stop loss smaller, by all means, you can make your stop loss smaller. But if I come back and I show blues in my trade, it's because my stop loss, quote unquote, is up here. It's not down here. If I enter from here, but I don't need to because I'm in the trade from up here. Because again, we had 72 hours to get in the trade anywhere in this zone up here from Monday to now. And my trade's from there. But if so, like I've said, if I was to enter here, my stop loss would be this area. And because it's so big, I would have to lower my lot size and just trade what I get. Um, let me go through this. Thank you. It does help me out. I do understand where you're coming from scalpers, but I do use two accounts as I know. Dangerous scalping. I usually use support resistance while scalping. Yeah, no worries, Ryan. You can use whichever one that makes you comfortable. Support resistance, supply demand, whichever one works for you. Just make sure you pick one time frame for trend, one time frame for entry. That's what you have to do, literally. So make sure you do that, and then you should be fine. As you set down supply and demand, if you do the zone on the daily, if you go down to the 4 hour, you can go down to whatever time frame you want for entry. You can go down to the 1 hour, you can go down to the 5 minute, you can go down to the 1 minute if it makes you feel better. But I don't do that when I'm giving out the trade ideas because that just overcomplicates everything for everyone, innit? But if you want to do that, you can do that. If obviously if your win rate changes and you're taking more losses, of course you can possibly understand why. If your win rate increases because you've got bigger RR, then of course you know why. So it just really kind of depends on what you want to do. But for me, obviously I can't give out 5 minute entry supply here because I'd have to be keeping the group updated constantly throughout the day, every day. Do you know what I mean? Because obviously a 5 or 15 minute or 30 minute supply of demand can appear every 30 minutes. Well, not every 30 minutes, but you know what I mean? Maybe every 2 hours, 1 hour, a new one could appear, whatever it is. Depends on the time frame you're using your supply and demand on, obviously. Um, but yeah, hopefully that answers your question, mate, as well. I mean, I can do the analysis, but the trade setup isn't ready right now for you, mate. I did explain that to you before. I can do, but it's really, really, really not ready yet. I'm telling you. For that trade for US 30 in them. I'm not even paying no mind to them. I told you that guy lost like over 3 million on US 30 or NAS 100. He lost a lot of money on that trade that I showed you because of that same thing I told you, traded all-time highs. Woo-hoo-hoo. I'm telling people, I'm telling you, I'll just keep buying it for now. Just keep buying it. But I'll go to it after. Let me make sure I clear all of this up. I don't wanna I don't want to skip anything, as I always say. Because I know this is for the people in the gold group. So yeah, so is everybody aware of what I said for the gold entry for now, please? Let me know if you're aware of what I said. And now you can trade gold today. Gold entry is right now. The recap I'll give you is gold entry is right now. You can enter for gold, but you got a 207 pip stop loss. Not favorable for some, but it's the way the market gave us our stop loss. If it doesn't hit this area here, then it can go to this 4 hour supply here And then you've got a smaller stop loss this time of 142 pips. Obviously, you've got a daily supply low here, and you've got a 4-hour supply low here, basically. So it can go to either one of these. It could spike back up to here and then come down. Because if you look in here as well, on the 4-hour chart, not the daily this time, there's an FVG in here. So it might want to go into this FVG here. You might want to go in there. So it might want to pull back towards maybe this 50% level in the FVG or around this level here, which is obviously the low of the 4-hour supply. So it could spike into here and then sell. It might want to do that. So for people that want to be more conservative and want to be a bit better with their entry, then you have to wait. If it does just fly away, then you have to look for another re-entry somewhere else, obviously, as it goes down. But if not, you want it to, it will spike back up into this area here again, which is the 4-hour supply low, and then you can find your trade set up. So for me, I've got no interest in entering gold here because again, I'm in from up here, which I was in from Monday, holding this trade for this sell. And then I was just repositioning my orders from Monday as it kept going down and up. I was just repositioning it as long as it didn't break above this level here, which it hasn't. So yeah, that's kind of the recap there, Bronson. If that answers your question. Let me know if that answered your question, Bronson, please. So this chart is in the gold. Yeah, it's in the gold group. Sorry, it's in the EZ Forex Enterprise Signal group. The VIP group is pinned in there. It's pinned in Discord as well, in the Charlie and the Chocolate Factory area here. So if you're in Discord, you can see every gold chart analysis. This is the cell that I told you I'm in right there. You can see, boom, it's pinned in here. You can see I'm always putting gold trades in here. Sometimes on the odd day I might forget to, but literally most of the time I do put in here. But yeah, it's all there. It's because I got so many groups. But you can see, look, all gold analysis, all gold, just to show people the proof in the pudding. Look, all gold analysis, all gold analysis. Can you see, guys and girls? Do the same as that thing. So you can go back and check any of these trades if they were winners or losers. You can literally go back and check if people want to figure out win rate, if they want to figure out if it works or not, or whatever. It's all here. It's all there, all proof of what I'm talking about right now. Boom, boom, boom. And you can see it's almost every day or every other day. It just depends. If gold doesn't do the breakout we're looking for, then obviously I can't go over it. It'd be the same trade. Boom, boom, boom. All right, cool. So let's go into here. All right, so now we're going to go into also, if anyone in AUD, Euro AUD and GBP AUD, it seems like when gold starts to sell, I take it it's because of the Aussie, but when gold starts to sell, then those trades start to buy as well. So that's what I've noticed. Because as soon as they're both going into profits, those are the only free trades I'm in this week. I've noticed that once they're pushing against each other, it's working. So when gold is selling, the other two are buying. It's the same for EN and GA. EN and GA are doing the same thing that EA and GA are doing. It's the same thing. It's the same thing. You just got to wait. You notice how none of them are actually really doing anything at the moment. They all bought up on Monday. They all started to pull back. They all found like a support, and it was just kind of hanging around there at the moment. Whatever they're doing, there's obviously a news event that they're waiting for. So when price does that, hangs around for 3-4 days, there's a news event they're waiting for. You just know it straight away. So there's no point even stressing yourself about anything. Just there's a news event. It's one of them. All right, so let's go over this here. So last week, we tried to get into gold, and let me do this. Yeah. We tried to get into the gold sell after the Zoom call and the daily break of structure. Let's put it here. Boom. So just to recap for everyone. So we could see price action obviously went and did a daily break of structure here. I'll do this better for you. You can see it. Boom. Price action broke this low here. Boom. Which created a daily break of structure here. So it was a daily bearish break of structure, which was great for us. Yeah, there's Euro interest news as well. There's Bank of is it the Euro Central Bank news? at 1:15 UK time, which will be around about, is it 7 or 8 NY time? It'll be around about one of those times anyway. So we can see here straight away that there was a daily break of structure here. After this daily break of structure that happened that was bearish, we also have, let's just remove these drawings. We also have FVGs. Now, again, FVGs typically are based on a 3-candle setup, but just so you can see it, I want you to pay attention to this first, and then we'll move the candles forward. So there was an FVG left here. Well, this is actually great because you can see it here. FVGs should really be drawn after a 3-candle setup. So you want one candle, another big candle, and then another candle. But what you want is the middle candle, whether it's buys or sells, you want that to be an impulsive buy or sell. Clearly, we can see this is an impulsive sell. And you want to pay attention to the wick on the left of this big impulsive candle. Where did that stop? So that stopped here. Now, where did the wick of the 3rd candle stop? It stopped here. So that lets us know that there is a fair value gap in between the market here, which is basically where the market hasn't cleared this level. So what they're looking to do is for price action to pull back into this level and either reject off of it, or they want price action to go back into this level and clear all of it. Then they could continue up, or they can reverse. Now, how I use this is I don't just use it, and nobody should be using it just based on it's a fair value gap trade it. You should always trade them with the trend and breaks of structure in the market as well. So again, we've already identified that there's a bearish break of structure here. So that lets us know that this fair value gap could be held as a resistance level for continuations of sells. We also had another fair value gap here, even though there isn't a 3rd candle. You can make them like this if you want to, and you can just wait until the candle's formed and then make it smaller. But we can see straight away what happened here when we move forward is technically this is what happened. So this wasn't mad. So price action literally closed the next day, the fair value gap. So this was the fair value gap that was left here. So they could have either rejected off of this and just sold back down now, but obviously they didn't decide to do that. What they decided to do with this fair value gap here is, and to be fair, if you're adding all of the analysis to fair value gaps, you're always supposed to count with using a fib tool. So from here to here, and we should not have traded this fair value gap here anyway, because even though there was a supply here, based on this daily break of structure, this was below the 50. So really you should only be looking for buys below the 50 and sells above the 50. What this is called is, this is the discount area down here below the 50, and this is the premium above here, which is above the 50. So above 50 is premium, below 50 is discount. And your Fibonacci should always look like this. Your sells should always be coming in from these numbers here, and then your buys should be coming in from these numbers below here. The settings for my Fibonacci, because some people might ask, is right over here as well. So you can see the settings for my fib right here. And if you ever do your fib the wrong way round, you can just press this reverse button and then notice that the 786 is down at the bottom and the 618 is. But obviously, because it's a sell setup, this is how it's looking like at the moment. It needs to be this way around. And then now what's happened is exactly this. Price action the next day has pulled back into this level. Where are we? We went above the 50%. So we are now in the premium. And this is where price action pulled back into to now actually activate that sell trade. The only sad thing we had here is when you're using the supply and demand. I'm going over this trade because this was a losing trade setup, even based on what I'm teaching you. So I'm trying to teach you about losers as well when they happen, and certain ways you might be able to avoid them. Or even if you still held the trade. I didn't actually lose this trade. I actually made profit on this trade based on the stuff I'm showing you right now. But just in case there's other people out there, because some people, they go full throttle and they'll just put their whole account on one setup that I give out, and obviously if you're not paying attention to if you're not aware of how to do all these types of extra stuff, then of course you might put yourself in a problem like that because you've put everything in one trade. So now anyway, as soon as price action is pulled down, it's pulled back into here straight away. The problem we had, unfortunately, is that on the 4-hour chart, we had our last supply high, which is here. So you can see they broke it with this 4-hour candle, making this supply level I just drew out here irrelevant, basically. But the problem with this 4-hour supply is, one, we can see already between this swing high and this swing low, price action was below the 50. So that could have caused that, not could have, that's what did literally cause this problem in this trade setup at the moment. Then price actions obviously pulled into this premium area for a sell. And this is where we realistically should have been looking for our trade setup. So if anything, you wouldn't have had your stop loss here. You would have had to have put your stop loss either above here or something like that. Or you could have obviously put it somewhere above this middle part of this fair value gap. Ideally, you'd want it at the top. But again, of course, that would have given you a big stop loss for that trade. That's understandable. So if that happened, you could sometimes you just got to take your loss, it is what it is. So anyway, obviously the 4 hour supply was below the daily FVG. So it could have easily have just hit this FVG and rejected, but it didn't want to. What they'll do, like with order blocks and supply demand, sometimes they'll go into the 50% region, which is the middle of the fair value gap area. And that's exactly what happened here. Price went into here, and then boom, now we start to see the rejection. And if we see it now going forward, you can see price action respected that level. It almost went back there again, and then boom. So you can see all they were after was there, that, like that. That's what our issue was with this whole trade setup. Now, if you go into the free Telegram group on this day here, which is the 19th of Feb, if you do scroll up to that day, you'll notice that what I did in the group is now, because I was in this trade, so I obviously wanted to break down what could be happening. I've gone to the 1 hour time frame because I saw on the 4 hour there was no fair value gap there. Sorry, let's put this back. And I noticed on the 1 hour time frame, there was also on top of that daily fair value gap, there was a 1 hour fair value gap in between here and here. And this is the one that I was looking at them taking. So this one here. So this is exactly where they went into. So they went into this 1 hour fair value gap, obviously went to the 50% of the daily, but you can see how this fair value gap still got mitigated. So it still got taken out of the market. But at the same time, this is where they were going towards. So even though it broke that 4 hour supply, I was looking at them seeing if they're going to hold this. Now, lucky enough, they only went here and then they reversed. They didn't want to go further. But that's exactly how I was able to maintain this trade, basically, literally like that. And that is the idea of the trade setup that I actually gave out at the last point, even though we was in a drawdown losing trade at that time. So that's literally what I did there at that point. Now, they did actually just tap into more fair value gaps here as well. We can see they're just holding the daily fair value gap, to be fair, at the moment. They did tap into more here, but it's on lower time frames. You have to start doing the same thing I did there, but going down into the 30-minute, the 15-minute, the 5-minute. And that's literally where you're seeing all of these spikes. If you go down to like the 5-minute, there was like a 5-minute fair value gap to get you in right here. But again, you don't want to be doing that all the way through the supply demands. You only want to be realistically doing that if prices pull back to an extreme level. Because if you do that from down here, you can see there was a fair value gap here that just got disrespected. So some people will try and get it. Well, it didn't get disrespected. It just didn't hold, a strong trade in a sense. Because you can see here, price action did reject off of that fair value gap and sold down. You see? So I'm not saying you can't make money, but you got to variate how you're making the money because obviously it might not do the big move from there. It might want to pull back to the actual supply or demand on the 4 hour or the daily. So as tempting as it can be to draw fair value gaps all over the place, because you'll find them everywhere, you've got to be careful which ones you're looking at. I would tend to look for ones that are the closest to my supply or demands, or preferably inside the supply or demand area, personally, something like that. Or even if it's slightly, imagine this was a supply sell. Sorry, if this was a demand buy, I would like to know. Sorry, no, even if it's a supply sell, I would look at like the fair value gap here, just to give you an instance. So even if it's like this as well, because then I know if it does an extreme, it might just want to go and clear this fair value gap and then reverse. So that is kind of how that works. Does anyone have any questions on what I've been explaining there with fair value gaps as well, by the way? Just so I know. Please let me know. Let me know if you've got any questions on fair value gaps, please. Getting mixed news. Euro news unemployment benefit claims was positive, but GBP news was negative. Cool, cool, cool. So that's literally what can happen. So now remove drawings. Now when we're looking at gold here, let's go to the 4 hour time frame. So we know we got a 4 hour supply here. Where is it? It's all the way here. We know we got a 4-hour supply from this highest point here, but this last bullish candle here. So I cover both of these because it's from here, sorry. Might as well cover this. This was still a supply here. This supply is still valid, but so I don't have two supplies in one area. There's no point drawing two boxes, just cover it all with one box. There was a supply from this candle, as we already I showed you at the beginning of this Zoom. And then there's obviously another supply here when it broke 4-hour structure here. It broke this bearish candle here. So there's a supply here as well. So instead of just, obviously, I'm not just going to do this and then draw another box after on top of it. I'm just going to cover this whole box like this, and it just makes it easier. This is why sometimes you might be looking and thinking, oh, why my stop losses might be slightly big. Sometimes it's because I'll just cover two, because there's no point doing individual one. You might as well. So again, you can see exactly what's happening here. So if it does want to pull back, it might not pull all the way back in to that 4-hour supply. It might just pull into this 50% here and start to sell. But that's still part of the daily supply zone, this area. Because right now we're at the bottom of the daily supply. If you go back to my, obviously, chart, we're at the bottom. So it might just pull into the 50% here and then start selling of the fair value gap. You understand? It might not want to tap into this 4-hour supply low. It might literally just go here and then start selling. So that's another thing. So this is why I'm going off fair value gaps today, just so you can understand what's happening sometimes. And even if the zone is very big, you can find a better entry as well. Again, you can see this fair value gap there. If we go to the 1 hour, so I'll just go check the 1 hour as well. And I can see there's a fair value gap here. So you can actually name all of your fair value gaps if you want to. There's another 1 hour fair value gap here. Right here. So they might decide to spike it all the way into here. And then basically literally here and then reverse it before touching this 4-hour supply low. So you've got a 1 hour one here. You've got a 4-hour one that's as big as this. And then you've got the 4-hour supply. So what is that telling you? That's telling you that there is 3 chances of price action being able to reject. It can reject from here. It basically is telling you there's 3 confluences. It's telling you've got, let's do it here. It's telling you you've got this confluence here, you've got this confluence here, and you've even got this confluence here. So the likelihood of them going up and selling has at least ×3 the chance of them doing that, especially after the daily bearish break of structure. So you've got 3 levels of resistance all within here. Now, exactly how you place your entries, you could stack your entries if you want to. Some people like to do that. You could enter smaller risk here. Let's just do this. You could enter a smaller risk here. You could enter another risk on the 50% of this 4-hour one. And then you could enter your next entry right up here. There, your bigger entry. And then you can now decide to close your entries as price is going down, the bad ones. So you can get rid of that one, get rid of that one, and then hold this one. And that's what I did with this entry up here, literally. So you can see I just did that. Is someone trying to ask a question? Let me know. No one's answering. No one's asking the question. Cool. So yes, this is the analysis. That's why. Yeah, fibs come in handy because of fair value gaps. You should only be using a fair value gap between, like I've said, yeah, the fib works with the fair value gap. That's what it is. So you always want to draw your swing highs to your swing. Obviously, the Fibonacci is swing highs to your swing lows. And then like I've said, you should only be looking at fair value gaps on whatever. It doesn't matter the time frame, any time frame. You should only be looking at fair value gaps for sales about in the premium and then buys in the discount. Premium is above 50% on the fib you've drawn out. So that's sales are from above, obviously always sell high. And then buyers are always from below the 50 on the Fibonacci, regardless of time frame. And then boom, you want to buy from there, basically, which is buy. Yeah, there isn't really much other trades. Like if it's Thursday, I mean, I'm not really looking to enter any positions. I've already entered all my positions. I've been holding my positions. Like, 'cause it's harder for me to give people analysis because, again, I trade a certain way. So I get people would want to, they might ask me trades and say, oh, what do you think this is doing? And I can give you the analysis if you want me to do that. It's no problem on a certain pair. But in the same sense, what I'm trying to explain is that, I'm going to always look at it from how I would observe it. If you're looking to get 10 or 20 pips maybe in the trade, I don't know how much it might help you, but If you're trying to get 150 pips in a trade, yeah, the analysis can work. So if you've got a pair you want me to check, then let me know. So like US 30, I wouldn't even look at it definitely because it's not even daily bearish. So I wouldn't even dream of selling US 30 right now. There's no point at all. No point at all. But what it is showing me is that there is a support area here. So if it is going to buy back up again from here to here, I can see there's a support area clearly. Price action's holding there. So I'd be looking to see if I can buy from this area. Even if you don't look at support areas, this is what I'm saying. You can use multiple things when you trade. There is a fair value gap here and here from this massive buy. So this fair value gap's gone down to here. So obviously prices hit a fair value gap, but really the fair value gap was this whole candle there. So prices in this fair value gap, so it could decide to buy back up, but it's obviously very high. So people are obviously looking for sales on US 30. And if you are looking for sales, you want it minimum, I would say is the best thing to do is to break daily bearish structure, which is here. You want it to break daily bearish structure, then you want it to pull back into a daily or 4 hour supply, and then you want to catch the sell lower high. That's what you want to do, however it's going to go. But it's not even daily bearish yet, so I definitely wouldn't even looking at touching that trade right now. Price action is really rubbish on these pairs right now. I don't know what's going on. These pairs. To be fair, the whole market's been moving kind of weird this week because gold didn't even break out to Wednesday. All right, Bitcoin's daily bearish, so is Ethereum. I'll check it in a second, no problem. Yeah, US 30 is nowhere near daily bearish as well. It's very high, so risky trades. Oh wait, you'll be even better, mate. Don't worry. Yeah, we're going for another liquidity run on Euro Ord, GBP Ord, and it'll probably be EN and GN as well. These guys love a liquidity run. Yeah, so it's the same thing there. So that's 100, and that's the same as that thing. Let's go to SPX. Yeah, right now they're just moving. Yeah, they're moving very weird, this market right now. It's moving very weird. I don't know what news event they're waiting for or what they're trying to do, but sometimes you just get weeks like this. If you happen to get in that week, it's just is what it is. SPX is the same thing as well. It's not daily bearish. I'm going to NZD CAD. I think this is the consolidation week, sadly. That's what it's looking like for now because they have it by now. They should break out. I'm going to give them to NY. They can still break out on Friday, but really by Thursday NY session, if you're trading a pair and it hasn't done a big breakout, then especially if it hasn't hit a previous week's high or low, that's how you can literally tell. If it hasn't hit a previous week's high or low, then yeah, they're literally in a consolidation week in that pair. Where are we? NZD CAD. I've got this one marked up here. So this is even one of the signal trades right over here. Yeah, so NZD CAD never pulled back. It needed to pull back. That's where it was. And this is the pullback. This is why you see what's happening here. This is why I never entered EJ and GJ, even though they did the move. It did this pullback on Thursday, Friday, EJ and GJ, but this one hadn't done the pullback when the week had started. You can see it just kept selling all the way down. So what we're seeing now is a pullback. So it's either here, let's go here. So it's either that they are going to, I think it's a weekly FEG here, yeah. So what can happen here is that it's either they're going to go clear this. To be fair, it's like the 50% of the weekly FEGs up here, just slight is very close to the stop loss though. So it literally could hold this area here and then sell down. Or this was the turncoat on Neo, by the way. This is the second turncoat on Neo. So it could literally hold this area from the H4 turncoat and sell. Or they're going into the 50% here around here of the weekly FEG, which again, if we just get the Fibonacci out, Uh, a second. Where is it? Friday was here. So from here, this was Friday's low from here. So I just want to see Friday's low from when I gave the trade out. Yeah. So you can see that price action, obviously from this, to be fair, let's move it from this swing high to this one here. This was the last swing. Yeah. Yeah. Price action hasn't got even above the 50 yet. So yeah, they technically could just go above here to here, which is ironic how that's the middle part of the FBG, and then they could sell it. Or they could at one point they could just melt it. It just depends on what they're trying to do. It just depends on their setup. Literally just depends. But yeah, right now you just got to see it for what it is. This is the pullback. I expected them to keep selling, but yeah, this is why I wait. So you can see what happens. This is why I don't give out loads of trades all the time, because as much as people want trades, you got to wait for what's going to happen before you give it out. So I never entered this pair because I didn't see this pullback, and I'm obviously in a lot of risk on the other trades. And I said I never entered this pair as well, so I'm not entering this pair. But I'm giving them out because just because I don't enter it doesn't mean that you can't take the trade. So obviously, if it loses, I'll still count it as a loser. But I didn't enter the trade because I didn't see this pullback. Now here's the pullback. So like I've said, I just broke it down there for you. I'm in GBP ord and Euro ord. Don't worry too much about the push on that candle there. Doesn't matter. It could just be a liquidity hunt. So it could just be a liquidity hunt. It's just will it hold or not? Don't because it's still daily bearish. It's not it's got to do a pullback candle. It's only done 3 bullish candles here. It's got to do 1 bearish candle in order for it to continue to go bullish anyway. So one of these candles, hopefully this one here, should start to sell it. Actually, I meant to ask you. I see more reactions from closes and open. Yeah, don't worry, mate. I will. If you've got any issues like that, then I'll just refer to me in the VIP group, and I'll go over that with you. So I'm just looking at my trades. I just want to make sure everything can pulled off. Cool. So Bronson, that was for you. Just message me in the VIP group, and then I will speak to you. It's no problem, mate. This what was I gonna say? Hold on, EJ. Yeah, we are bullish on it, but they are just running. They're just being very annoying this week. That's what I said. We could just be in a consolidation week because because it's Thursday. Like if they don't reverse it by New York today, again, they can still push it tomorrow. That would be highly annoying having to be in a trade for 5 days. But yeah, they're just being very silly right now. So you can see GBP New Zealand. This isn't a trade entry from. Is it from here? It could. Well, it's not from here, but the newer one could be around here somewhere. So I have given out the signal, but I wasn't at my computer yesterday. But yeah, basically what's happening here is that price action, I wanted it ideally from the start of the week to pull back into this area here and then continue to buy. You can see why I say wait as well. Even if I don't take a trade entry, you've got to wait sometimes because if you don't, that can happen. But I did tell people you could buy EN and GN as soon as the market did break out from here because G Ord and E Ord was buying. So this move here was actually a winning Neo trade, and from somewhere here the 4 hour broke, and there you go. It was at least 100 to 150 pip buy trade anyway, but then it pulled back. I never entered it again on any of the other accounts because price action didn't pull back into any of my areas. So this is why you got to wait for price action to pull back sometimes because they'll do this. It looks like it's about to go daily bearish as well, which is you definitely want to be out of the trade. If it closes daily bearish, you don't even want to hold that trade. Don't even want to hold that trade at all. If it goes daily bearish here, closes below there in the daily, then yeah, you definitely want to be out of that trade. Anyone that's in that. Because then it's going to more than likely pull back into this area before it does reverse. I think because it did such a big buy, they're trying to pull back price action now. And even when I looked at Euro Ord, it did like 12 bullish daily candles all the way up. So it looks like it might be trying to. We'll see. No, it's Euro, it's GBP or not Euro Ord. I've already checked NAS 100. It's just there's no point even trying to trade that, mate. It's got no sensible structure. Manuel, it's got no sensible structure at all. Look, it's in the middle of thin air. There's no daily bearish breaker structure because I take it you're trying to sell it. Are you trying to sell it or buy it, Manuel? There's no daily breaker structure. There's no supply demand as far as I can see, even based on the daily. There's no demand or supply. Okay, there is a demand here. There is one here. This is a very weird one though. But I definitely wouldn't even be trying to touch NAS 100 right now. Wouldn't even be dreaming of trying to touch it. None of the indexes would I, because they've all gone too high. So there's a demand level there, but I don't know if it wants to buy back up or if it wants to now start selling. So you're kind of in the middle because they can say, hey, yeah, we're finished now. It's time to start selling. Or they could reverse and go up. Yeah, no worries, mate. No worries, Nick. I'll look into that. Cool, cool, cool. I'll check Bitcoin now for you, Pikachu. Like I said, Bitcoin's daily bearish, but it is in a buy area though. So it might actually hold this area here. This is a buy area that I've had marked out. You can see how it's broke out, came to this area again, bought up. So it could actually hold this area and continue to buy back up. Literally. I definitely don't trade Bitcoin on MT4, so couldn't tell you how the best way to trade it. Couldn't tell you. I'm not gonna lie to you. All I can notice is that it does kind of follow structure, but this thing pumps and dumps like no man's business. So yeah, but what I do know is it is in a buy area. So if you are looking at buying more, this is an area to buy from where it is right now. Sorry, EJ, yeah? Yeah, EJ should still be fine as it is. EJ. So it tested the previous week's high. Well, this weekly high here. This was the weekly high. It tested there. It is. Oh no, EJ is daily bearish. That's what I checked. I think it is. Yeah, it went daily bearish, by the way, mate. I forgot to tell you that. All this no sleep. So when I went to go check it later on, I can't remember what time in the AM I checked it. It's daily bearish, by the way, mate. EJ. So that isn't a great sign. Daily bearish because it could literally hold this level here, this daily supply, which you can see it has reacted off of, and it could be looking to push back now. So I forgot to say that. My bad. But yeah, EJ is daily bearish right now. Literally. This would have been nice if EA, GA, GN just did this. This is what I wanted them to do. Like, just do this move. Or at least by like Wednesday, they would have done this move. But yeah, right now they're just doing this consolidation rubbish right now. Is there any other pairs you want me to check, people? Euro news keeps coming out negative as well, by the way. Right? No, this one came out positive, but it's sold price. The pagans. Yeah, it's the European Central Bank news. And then there's the durable goods news. That's a big one as well for so 1:15, 1:30 UK time, London session time. Um, that's PM. That's the news you want to watch out for gold, everything really, to see what happens. Let's go to silver. Probably buying as well, pulling back. Yeah, yeah, already. Straight away. Knew it already. Yeah, there's a bearish daily FVG here. So you can see from my chart markup that I did for the VIPs right over here. Boom. So it's probably wants to clear this one. So either clear this one or react to this and it could sell back down. It's so funny how they're pulling back to these levels just before the news today. So it's really the news today. We've got to see what happens, but they could go into this zone and then look to start selling it with news. Because obviously, if this sells, I'll take it. If gold sells, this should sell. In theory, it should sell quite heavy as well. Even though they move slightly different, they move the same direction, but at slower and faster paces, basically. But you got a daily FEG there. So if you go into the EZ Enterprise Signal Group, you can take this chart as well, mate. By the way, Neville. Oh, sorry, that's not Neville. Sorry, my bad. That's Travis. My bad. Yeah, Travis is there. So you can take this chart from the EZ4 Enterprise Signals, the VIP group. You can take it and you see it. But yeah, they're probably going into this daily FEG here. That's what they're trying to do, mate. Explain daily bearish, please. What do you mean by explain daily bearish? What do you mean by that? So I can understand. Do you mean on EJ, Bronson? Do you mean on silver? What do you mean by that, please? If anyone's got any other questions, please feel free to ask me if you want me to check a trade. If you're currently in a trade and you want me to check it, let me know. It's no problem. Don't be scared. John's been holding a trade for 4 days now. Well, this is the fourth day. Don't be scared. These markets will be pagans when they want to be. Right here. So if you get your path tool out again, and we was coming up from here, would obviously come from the bottom of this bearish candle, so it would be going up. Then we'll come here, then we'll go down, then we'll come up, then we'll go down. And then you can see here the V part of this structure, which is here, A's and V's. That's what we care about, what price breaks. This candle yesterday broke this V, meaning that was a daily bearish break of structure. So once that happened, there was a daily supply on this last bullish candle. And that is what EJ is reacting off of right now. You see? So you definitely don't want to be in this because it could literally just sell back down a bit before it wants to possibly buy back up. So that's what I was showing the previous student. So does that make sense to you, Bronson? JR, I will check that now. GBP CAD. Yeah, I wouldn't sell it right now if you are. It's based on the daily. This is what we're basing this on right now. Is the daily. The daily's bullish right now. So I'd wait for it to go daily bearish, which the break of structure for a daily bearish break is this bearish candle here. Again, just so people can see it and understand it. If I start from the bottom of this green candle, you could start from wherever. It did not go bearish again to here. Then it went bullish. Then it went bearish. Then it went bullish. Then it went bearish. And then obviously it closed bullish. So if it was to break any break of structure bearish, it has to break this V over here. So if it goes all the way down here, then I would sell it. But personally, I think it wants to go and buy above this level here, probably with news. So right now, I wouldn't sell it, but again, it's completely up to you guys and girls. Like, I take it while you're probably selling it because it looks like this is a resistance area here. But for me, I wouldn't because it for me, how I've been watching GBP CAD over the last couple of weeks, it looks like it wants to break above here. And personally, once it breaks above this level, like see it marked here, then I'm going to be looking for what is going on. Is this one here? Nope. Um, I want to be looking for the breakout and then the pullback and then the continuation. That's what I'll be looking for myself. Currently in a buy position lot size just to catch the pullback on gold and help determine my entry. Yeah, it says iPhone. I can't see the person's name, but it says iPhone. Yeah, you could do that because obviously, if it has broken daily structure and you're waiting for it to go back to supply, down to the trader and however they want to trade, you could obviously buy it back up to the supply. Do you know what I mean? Because obviously, we're expecting it to go there. So you could catch yourself some pips like that. So there's nothing wrong with that. And then waiting for news to try and see if it sells. I've always I have always this problem. I don't know exactly where to put your TP. Okay, yeah, always go to the weekly chart to put your TPs. So let's say you were trying to catch this sell now. Let's just say for the trader that said they want to catch this chart. So here, always use previous days highs and lows or previous weeks highs and lows. I swing trade, so I use previous weeks highs and lows. The logic behind that, I mentioned it in the previous Zoom call. There's always going to be liquidity resting at the top of wicks and the bottom of wicks on the daily chart specifically and a weekly chart. The reason for that is because if you think about it, every candle has to go up to a high point or a low point at a week. Whenever it did do that, it's probably reversed and bought all the way back up or sold all the way down. So if that's happened, that means that they've placed a order in this area somewhere here. They've placed orders. They placed a buy order here. They placed a sell order here. So what do they need to do to continue moves? They need liquidity. You see? So for them to need liquidity, which is a certain amount of money, then they're obviously going to go back towards that level to grab that liquidity. So you can always use previous weeks or previous days, highs and lows. So let's just say right now, I was in this buy trade. Where would I have been targeting? I would have been targeting any liquidity wicks they haven't touched. So this week they grabbed this weekly high here. So my TP1 has been hit. If I got in from this low, let's just say my TP1 has been hit. Now my TP2 would be here because they haven't grabbed this liquidity yet. So this would be my TP2 based on how I trade. Literally, that is the best way to find your take profits is literally use previous days highs and lows and previous weeks highs and lows. Go check any of your winning trades. Whoever asked that question, go check any of your winning trades and then see first start on the weekly, then go down to the daily. Yeah, if it didn't hit the weekly, go down to the daily and see if it hit one of them. I guarantee you that the TP that was a great trade for you, and if you're winning trades, it hit a previous day's high and low that it never grabbed the liquidity from before. It hit that level, or it hit a previous week's high and low. That's what they tend to do. So just go check me trade. Yeah, let's go to check my trade because these people are being so cruel. They're being very wicked, as Nigerians will say. They're being wicked right now. As the markets. Yeah, always check Awanda though. Even though I check because now I've got loads of brokers connected to my phone. I check them as well. I just check different brokers, but always check Awanda. That's the main thing. Check Awanda. Just to be sure. I think TradingView has the most accurate candles. Yeah, I always use Awanda on TradingView. Just use Awanda. It's got the most accurate candles. Mr. E or Miss E, I don't know if it's a guy or a girl. Did I answer your question about take profit levels? Because you said you don't know where to put your take profits. Did I answer your question there? Yeah. And when you've got that idea of where you can put your take profit levels, now you know where to put your now you know how to work out your risk to reward on your trade. So if we do go down to GBP CAD and let's say I entered at the bottom of this trade, let's go to the 4 hour chart. So let's just say I entered here on this 4 hour breaker structure here. Let's just say I entered there. Now I know when I get my short and long tool, well, my long tool, if I entered here because it broke 4 hour structure, you can see this bullish candle broke above this bullish candle's high. And if you use the way I told you to use the path tool, you'd have seen this was an A point, which it broke, hence why it's a break of structure, bullish on the 4 hour. And then obviously your stop loss will be below this low. Let's just say it's below this low here. And then I can see that if I was to take this buy trade, this would give me a 1.3 R. So basically a one-to-one trade. That's no problem. If it goes to TP2, this would give me a 2.7 R trade. So now I know how to go to my pip calculator or whatever one you use and then work out GBP CAD and then work out what obviously lot size I want to use on that trade setup to make how much money I want to make, how much I want to risk, basically. And all I was able to do that because I was able to know where my take profit levels are. So that should solve a lot of people's problems when getting in trades. A lot of people are like, but what risk to reward should I use, to make sure to figure out the strategy? If you actually work out your TP levels, Your stop loss should always be at your last low or high based on your break of structure, as you just saw me show you there. There was a 4 hour bullish break of structure here, just to confirm this with people. I'm just going to do this quickly. So it goes down. So yeah, it'll go down. It'll go from here to here. Yeah. So you see, boom. But there was a 4 hour break of structure here at this A here, boom, with this bullish candle. I've entered there, stop loss below this level because that's telling me that a higher low has formed in the market because of this break of structure. So it told me on a 4 hour time frame, a low or a higher low has been formed because of this break of structure. Now I've got into the trade or now I can work out, or now I'm trying to work out where my risk to reward can be. Okay, if I'm getting in here, my stop loss is 61 pips, then now I can see to TP1, it would be how many pips? To TP1 again, you could do your risk to reward or whatever, but it's 82 pips, so that's more than a 1-to-1. Okay, cool. TP2, okay, that gives me almost a 1-to-3 R trade. That's great. I can work on my risk. And that was because I worked on my take profit level first, waited for the break of structure, and now I know if the trade is worth me taking to TP1 or TP2, literally. Let me just put this, I'll put this in the chat. I'll put it in the chat there for you, mate. So yeah, it's always good to double check when you do enter a trade though, because that lot size calculator, I think it works on around about it's like a 1-to-100 or 1-to-500 lot size account. So it might not give you the correct reading all the time. So you have to be careful with that. You have to be careful, 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 careful. Anybody got any other questions they want me to answer? And so far, how was the Zoom call for you? Obviously, I've gone over the gold analysis that's at the beginning. How was the Zoom call for you so far? Everyone, guys and girls in here? By the way, GBP Ord broke 4 hour structure as well. These actual pagans. They broke it in the last reversal going in London session. So I don't know if it will reverse today or later on today. It's just that news. Just gotta wait. But there, it broke 4 hour structure here, which is annoying. That's why you can see it's even reacting off of it now. Broke 4 hour structure there. It just hasn't got the news it needs to break higher. It needs news. I need it to go here. I don't know why they're being so long because this is a big wick that they're just leaving here. This wick here is so juicy. They just need to grab the damn wick already. But I don't know why they're taking so long to grab this wick. It's a simple move. Even if they went here and pulled back, I'd get it. But you know, they just left this line here for no reason. Someone haven't gone back to grab it straight away. What do you mean by levels, mate? Do you mean levels as okay, great as always? Okay, levels. I thought you meant levels as in market levels. No problem. Um, if price hit the order block once, this order block is still effective to use. Yeah. Most definitely. Price will hit order blocks and supply and demand multiple times before it goes off or goes on. It's still effective. That's you're thinking of that with fair value gaps. If price action goes to a fair value gap, I believe what they say or the rule of thumb is that that means it's been mitigated, so it might not hold. But supply and demand, it could bounce off that level 5 times before it decides to go off, 6 times even. Yeah, we just have to see. We have to see, book what it is if they've shifted their bias and anything. Because that bias is, well, to be fair, it's not 2 weeks old, but they've been holding that bias for like 2 weeks now on euros and GBP being strong and Aussie being weak. The thing is, it's gone into profits a few times. If every single time I took it out near the previous day's high, it would have been around almost about 2K profit on an account, on the live account. But hey, it's the game. You've been there with me before when I've closed trades. That what 2K profit. This was a 7K trade. It could have made 8K. You've been there with me. So that's why I'm trying to hold trades. Not crazy, but come on, the previous week's high, you should go for that. I mean, it's a ridiculous wick they've left here. I don't know why they're doing all this. This is just when you get yucky price action. I mean, look how clean this is going up. But then when it got to this point, now it's just doing all of this. This is yucky. I don't know why it's just not at least spike and then pull back and then do it. Because at least then they've grabbed that liquidity. Right? It's the trade game. It is the trade game. Anybody else got any questions before we close this? I don't want to make it too long because, as always, people do not watch these damn Zooms to the end. I'm like, guys and girls, you don't understand. I'm giving you so much source here. You need to watch this to the end. It's going to be uploaded on YouTube anyway. But again, if you do want to get into any of my services, trade copying or anything like that, then you are free to get in there. Right now, we're still in some type of profits on the account now. It did go up quite well. Well, it went up about 25%, 2 weeks in a row. Price actions only hit about 25%. I think last week was about 15% worth of profit to the account size. But I never closed, obviously, because I'd love at least like 50%, but it never got there. That was NJ we took last week. So I closed at break even, no loss at all last week. This week, it's still in profit currently. It has gone up 25% this week in profit, but as you can see, GA and EA is what I'm in, but price action just keeps doing this silliness right now. It keeps going up and then pulling back and going up and pulling back. So yeah, I'm just waiting to kind of see, trying to play it by eye to see how it behaves. But if you want to get into any trade copying or anything like that, message me after the Zoom. If you want to get into prop firm management or anything like that as well, message me after the Zoom. That's 100K accounts and 200K accounts. I am trading. Nothing lower than that, please. Are you trying to? Yeah. I'm not getting in gold. I don't need to get in gold. I'm still holding it from the previous trade. But I've already gone over the whole gold analysis, the whole chart markups in the Telegram, Discord, etc. And I did it at the start of this Zoom call as well. It takes a while when I do Zoom calls to upload to YouTube. It takes a while to upload these Zooms to YouTube for some reason as well. So there's no, but the whole chart is in there. But I don't need to enter any gold trade today, like, because I'm still holding my position from higher up, which everyone had again 72 hours to get into some type of position on so on gold, which is higher up than where it is now. And then you would have just been holding your trade just to see how it plays out with today's news. Yeah. All right then. Other than that, the main reason I did that, that's no problem at all. The main reason I did it is just so people can see that I take accountability of losing trades as well. I'm not coming in here saying I'm a perfect trader. I do lose trades as well. And I gave the full analysis of why we lost gold as well at that time last week, even after I did the Zoom call, and then the possible setups for today. That's no problem at all. All right then. I will leave it there, guys and girls. You have a great one. I just wanted to get in for a London session. You have a great one. And I'll try to upload this as fast as possible for everyone. All right. Take care. Take care.